Hey everyone, this is Keith Johnson, Financial Coach here. Welcome to episode 2 of the Financial Coach. And one topic I want to talk about today is spending less than what you make. Fortunately and unfortunately, in this country, we have access to something called credit. Credit means that you can borrow money that's not yours and use it to buy things that you need or even sometimes, unfortunately, you don't need. 5 things I want to talk about in terms of helping you to figure out how to spend less than what you make. First, determine how much you make. And then 2, you determine how much you spend and on what. So for the first part of it, when you're trying to determine how much you make, if you are fully employed at a company or organization, just take down your pay stub. Your pay stub will show your salary. It should show all the taxes that are taken out before you get the net amount into your account. When it comes to figuring out how much you spend, that could be a little bit trickier. Some people still avoid credit cards and debit cards for various reasons and may use cash. And other people that do have access to credit cards and debit cards, you should be able to get access to your bank account and pull your bank statements. Pulling your bank statements allows you to quickly get access to your previous spending. And then if you pull the last 3 months, you get an understanding of your spending patterns. And your patterns could be how much you spend on travel, how much you spend on food and gas. These key elements are key to determine what's that difference between how much you make and how much you spend. So now we have 1, how much you make. 2, we have how much you spend. And 3, we have how much you spend across various categories of expenditures. The 4th piece is making sure you get that 3-month trend. So for individuals that don't have a debit or credit cards or don't use them currently, I recommend you do, and I'll have another podcast on why you should. For people that use cash, you may have to spend more work, either use a computer, Excel spreadsheet, or even on a piece of paper. As you take out cash and use it on food, groceries, gas, try to track that over a period of 3 months if possible, because then you want to see how much you're actually spending and is how much you're spending, how much you expect. And then next you'll be able to calculate what percent of each type of spending category is a part of that total income. And on a future podcast, I'll show you how you do a percent breakdown of what your housing should be of your income, how much your food and beverage should be, and how much your discretionary income should be. Next, when you have your 3 months of your budget and a spending, and you understand your spending pattern, then you can make adjustments and track. So if you say I'm spending way too much on food or dining out, how do you then think about, okay, the next month I'm going to track this and be more conscientious of how much I'm eating out? Or if you say, hey, I shop too much, I'm spending way too much on shopping and I can barely make ends meet at the end of the month, how do you then think about maybe I can shop less, or maybe I can buy things that are less expensive that I may need? And here's why you should spend less than what you make. So when you spend more than what you make, you essentially have nothing left for yourself. You essentially paid everyone else except yourself to ensure your future financial freedom. And so you basically going towards a cliff full speed, steam ahead, or even at a slow pace, but eventually you're going to fall off that cliff. So to prevent that from happening, you need to make sure that you have the discipline within yourself to make sure that the money you come in, at least a piece of it, is set aside so you can save it and invest it to build a foundation for your future. And that's the key piece of spending less than what you make. So doing all these tactical things helps ensure that the money that goes outside of your account is less than the money that comes inside of your account monthly. And that's key because as you want to build wealth, you want to increase the amount of your income over a period of time. Whereas while your expenses may increase, you don't want them to increase fast as, or especially not faster than your amount of income. Because if not, if your expenses are increasing faster than what you make, then that is a recipe for disaster. You're driving off the end of a cliff, and no amount of refinancing or consolidating your debt will get you there. You need to make sure that you have that gap of less income or more income, your expenses should be a lower percentage of your income. And so then you should have a greater opportunity to save and invest your capital in your retirement and in future investments to make sure that you ensure your financial freedom. So this was just a quick episode 2 on spending less than what you make. Feel free to comment. Let me know your thoughts. You can reach me at KeithJ_the Financial Coach on Instagram, as well as Keith D. Johnson, the Financial Coach on YouTube. So let me know your comments, and then let me know what other topics related to spending less than what you make or other topics related to financial literacy you'd like to learn. Talk to you soon. Bye.